Hi, today I wanted to share three myths with you regarding home buyers still not getting into the market here as we enter into 2026. And those myths are largely fueled by the media, maybe your parents, things of that nature. So I want to try and debunk those as best I can. Let's start with the first myth, which is I have to have a super low rate in order to purchase. And while I'm certainly not going to argue that if you could get a 3% or 3.5% interest rate, that it wouldn't make your payments way more compatible, lower, et cetera, we have to keep in mind that it's very unlikely we're going to see those kinds of rates again. Most experts agree that took place at a time when the country was going through some, economic emergencies, if you will. And so policies were put in place in order to get those rates down to re-stimulate, get the economy up and running again. And now that it is up and running, unless something like that occurs again, it's unlikely we'll see those kinds of rates. I've been doing this for over 30 plus years. And, back in 2021, 22, when the rates were that low, that's the first time that we had ever gotten that low in that entire time frame. We saw rates more typically between 5 and 7%. And that's essentially what we're expecting kind of going forward. When you look at what is projected for 2026, most experts agree that high fives to low sixes is where you're going to be at as far as rates going this year. So therefore, it's not so much about holding out for a really low rate. It's getting with a lender, making sure you're getting into the right type of program, right loan, and then utilizing, maybe seller concessions, things like that, where we can then take that money, use that to buy down the rate, get you a lower rate that way and a lower payment that way. So there's definitely some things we can do around that, given the difference in the market today versus even back during the time when all those rates were really, really low. Inventory was not nearly enough at that time. And so you had a lot of bidding wars and things of that sort. Now, inventories are coming up. It's not as frantic. And so sellers are more willing to work with you. The second myth is that you have to have 20% down. And again, that probably comes from maybe your parents, maybe some older buyers, because that used to be the case years and years and years ago. But the truth of the matter is today you have programs that allow for as little as 3% down if you're a first-time home buyer. FHA is 3.5%, and you don't even have to be a first-time home buyer. So really, with a 3 to 5% down payment, there are many programs available to allow you to get into a home. Now, if PMI kind of scares you off and you think that's a real bad thing, truth of the matter is that's improved over the years as well. And so if you have a really good credit score, maybe not a lot of debt, things of that nature, that monthly mortgage insurance isn't nearly as high as what it used to be. Just depends on the loan program that you're going with. Again, this leads back to just making sure you're in the right program. Okay, myth number 3, a lower purchase price is going to be better than lower interest rate. That's simply not true either. Now, I've shared this in the past on other videos. And the truth is, if let's say this example, let's say you have a $400,000 purchase price and you want to reduce that by $10,000. So you want to offer $390,000. And then you're going to make a 5% down payment. Well, under that scenario, you do 5% down on 390, and that monthly payment in comparison to what it would be if you paid 400,000 and put the 5% down, you're going to save about $60 a month. However, if we offer the 400 and now we take that same $10,000, we ask for a concession of 10,000 from the seller, and then we use that to strictly buy down the rates. We apply that to get you a lower interest rate, use that towards discount points, lower the rate down. That'll save you somewhere between $150 and $175 a month under that scenario. So the truth is, you're actually paying more, borrowing more, but your payment's about $175 less versus you're borrowing a little bit less, but not getting that assistance. So you're paying a slightly higher rate and you'd only be saving about $60. So again, let's look at what is best for you and best in your situation. And oftentimes it's not discounting the price, it's taking that money and instead of discounting the price, saying, hey, let's use this towards buying down your rate. So listen, I hope you found this information helpful. And if you did, please do me a favor, subscribe to our page here. If you found it interesting and helpful and you know others that might find it interesting and helpful as well, feel free to share the video with them, forward it to them. Greatly appreciative of that as well. And finally, if you want to find out more about what you can qualify for, what are the steps necessary to get this whole process started, give us a call, text us. We're available to sit down with you, walk through your situation, figure out what's best for you, and start putting a game plan together. Because it's all about getting the right loan, the right program, the right roadmap, if you will. It's not about these other things as far as having 20% down or waiting for a super low rate, etc. Okay, listen, you have a great day. We'll talk to you soon. Bye-bye.